Okay, sweet. Looks like we're back. Sorry about that. We just had to fix a small issue. So if you guys can hear and see us, give us some of the emojis on the side. So okay, great. Looks like we can see it. Awesome. Thanks. Okay, thanks. Everybody's here. Super. So guys, a little bit of housekeeping before I introduce Sid and we get started with this session. We have Sid will be doing a technical deep dive now on the account aggregator platform. After that, we have another presentation, which I'll tell you a little bit more about. The teaser is that we had a big competition to come up with use cases and business models for account aggregators. The winners of that competition will be presenting. So that will take place at around 5:30, depending on when this talk ends. But after that, for the rest of the evening today, this AirMeet page will be open. So I was really glad to see that all of you guys have been interacting and networking in the social lounge, which is that page which is available when there's no speech or speaker happening. So that's really great. We'll be keeping that open so people can network, find teammates, do things like that. If you have any questions about how to use AirMeet, the support team is available. You can put the questions and comments on the side in the chat. So that's it from me from a housekeeping perspective. So I'm going to now introduce Siddharth. I'm very happy to introduce Siddharth Shetty. Sid is a fellow at the iSpirit Foundation. And as you will soon see, he is one of the most talented people that you will meet. Despite his young age, Sid has a lot of experience as an entrepreneur and change maker. At iSpirit, he's been instrumental in driving the policy, business, and technology architecture of various systems, such as UPI, the Digital Sky National Drone Platform, and now the Account Aggregator System. As one of the authors of the official technical specification or contributors, he is the best person to do a technical deep dive for this hackathon. Over to you, Sid.
Thanks a lot. Thank you so much, Ariman. Let me just share my screen. Perfect. Thanks a lot for joining in, and really look forward to seeing the hacks emerge over this month-long event. A brief intro into iSpirit. iSpirit is a non-profit volunteer technology think tank, and we primarily take a long-term view of problems. So typically we take a 20 to 30-year view. And the two problems that we've picked up are two societal problems that we've picked up are financial inclusion and health inclusion. And our belief is that any significant change takes time, right? Whether it is getting people to segregate their garbage is a 20 to 30-year class of problem, or autonomous vehicles for that matter, right? You can trace it back to, in the year 2000, Carnegie Mellon setting up the robotics lab along with Chuck Thorpe and others. And it's taken about 20 years to now see those cars on the road. And therefore, you do need a class of institutions that anchor that. And we play a similar such role within the Indian ecosystem. Within that time frame, you can imagine VCs and other policymakers typically taking a 10-year horizon. And then doers like yourself, developers, folks building these startups, typically taking a 3 to 5 year horizon, either as existing incumbents or challengers to these incumbents. And our goal within iSpirit has been, can we go ahead and build out world-class digital public goods in the areas of financial and health inclusion? Within financial inclusion, specifically, could we democratize credit for every Indian? And if you look at it, if you just step back for a moment and look at the history of technology, it's often happened, innovation has often happened on the back of public goods, on the back of public infrastructure, right? So take a look at Uber. Uber solving an old problem of hailing a cab using new infrastructure, that's your GPS, your smartphone, and digital payments. Take a look at any email client that we use. It's on the back of a public standard called SMTP. But on top of SMTP, multiple companies have innovated with different business models, right? You have someone like Google building out an email client that's run on ads. You have someone like Proton Mail building out a privacy preserving email client. There's a diverse set of applications that get built on top of a public standard like SMTP. And the same goes with HTTP as well, and the innovation that happened with browsers. And many times in the early days, it is extremely messy. I mean, for the hackers on this call, if you go back in time to the early days of the browsers, it was extremely messy. I mean, apps, you had huge compatibility issues. Apps working on one browser client won't work on the other, issues in terms of the OS compatibility and so on, right? But unless you immerse yourself in that infrastructure very early on and power through, and for a certain set of us that get joy out of all of this complexity and abstracting it away, if that doesn't happen, value is not really going to get created, right? And you're going to go through a similar journey as you experience the account aggregator ecosystem, where there is going to be uncertainty, there is going to be messiness. While the standards are laid out, there are going to be a lot of open questions out there. And while we'll resolve a bunch of them through the course of this session, a lot more will come up. And that's the messiness that we have to get enthralled by and dive deeper into, and then build applications that solve for it. So if you take a look at the India stack, because what we're talking about today, account aggregator, specifically fits into what's called the data empowerment and protection architecture, or more commonly known as the consent layer of India stack. But that's actually the final layer on the back of a range of digital platforms India has built over the past 10 years. As you heard Nandan talk about it earlier, it started off with Aadhaar, and that gave the chance for every Indian to open a bank account. In fact, because of Aadhaar, India accelerated financial inclusion by almost 36 years. Traditionally, it would have taken us 46 years to reach where we did in 10. Then on the back of innovations like e-sign, you now had the ability for any Indian to digitally sign a document that was legally valid in a court of law. And e-sign again is a public specification on top of which multiple private innovators have built front-end apps that allow you to digitally sign versus the conventional method of thumbprints or hardware dongles and so on. eKYC was a similar attempt built on top of Aadhaar. The goal with eKYC was essentially to facilitate consented sharing of your KYC information from UIDAI with any service provider. So let's say you were opening a bank account and they needed your KYC, or you were opening a mutual fund account and they needed your KYC, or you were getting a SIM card and they needed your KYC information, rather than you handing that KYC document every single time. And that's often very insecure. It's rife with privacy issues. The question was, could we facilitate a safe, secure way for that information to be shared from UIDAI with the service provider with your consent? And in fact, what we're going to be talking about later today, the account aggregator system just generalizes that same framework, making it go beyond KYC information to other categories of financial information as well. And many of you may have experienced the power of eKYC when you probably got a Geo SIM card, which allowed you to walk into a store and in 5 minutes flat walk out with an activated SIM card. Along the way, UPI was also built as a mass market payment system. Many of you may experience this through Bheem or Google Pay or Phone Pay and so on, all on the back of public infrastructure, which in the case of UPI is run by NPCI. And today, I mean, I've forgotten to even update the numbers on this, but UPI in India does more transactions than credit and debit cards put together. Yesterday, what India transacted on UPI was more than American Express's transactions worldwide. And as Nandan outlined, our goal is now to get from 1 billion a month to 1 billion a day. And when that happens, we will overtake both the transaction numbers of Visa and MasterCard worldwide. And for a moment, I'd like to explain how the UPI architecture works, because a lot of those code building blocks will help you understand the account aggregator ecosystem, what parts of it fit as public infrastructure, what parts of it where private innovators can jump in and build on top of. So you could think of UPI as a 3-layer cake. At the base, you have the NPCI switch. NPCI is the National Payments Corporation of India. They run, besides for UPI, the ATM network and other payment networks, IMPS and so on, right? So NPCI at the base connects to all the banks. Then in the middle, you've got your bank, which is where customers' money resides, right? So money remains with your bank account. It's not with any other store of value, like say a Bitcoin wallet and so on, right? But the issue with banks is they do not innovate on the front end experiences. And given that, I mean, we're a population of over a billion, we have like so many different languages, 30 different languages, 30,000 different dialects. It's not possible for one entity to create these diverse experiences across multiple modes as well of self-service and assisted. And therefore, in the case of UPI, what we did was we essentially unbundled the permission out from your bank account and placed that into third-party innovators like PhonePe, Google Pay, WhatsApp, Beam, and others. So if any of you transact using these apps, what you'll notice is they don't sit on your money, right? They don't participate in the money flow. They're purely permission collectors. So you register on, let's say, a Beam, you get your ID, UPI ID, right? Let's say it's Siddharth at the rate of UPI, and or your mobile number at the rate of UPI. And I can now give this ID to a merchant. Let's say I go to Amazon.com, and at the time of checkout, I give them my UPI ID, and then real time, Amazon sends a collect request to me on my UPI app, which I then look at. If it checks out okay, I approve it using my UPI PIN. And then in real time, a permissions artifact gets generated that is sent to my custodian bank, who verifies it. And if it checks out okay, then debits my account and credits the destination in real time. So all these players are doing is really serving as front ends, diverse front ends for the consumer, which may be an individual, a small business, or an enterprise, to collect their permission, while of course their money remains within their bank account. And this interconnectivity is provided through the NPCI system for one bank to talk to another. So if you look at it, this architecture is fairly unique globally. So on one end, you have what's happening in China, right, where money remains with wallets, and then all innovation is controlled by layers on top of wallets, right? So any new financial product innovation gets controlled by that. And that's not okay for a country that is so diverse. You have, on the other hand, efforts, let's say in a traditional system like America, where they're unable to have innovation within the traditional banking system of central banks, clearinghouses, and so on, right? Those are very slow to innovate. America is probably 8 to 10 years behind India in payments, right? And as a result, what's happening is entrepreneurs out there are saying, let's disintermediate the banking system and go down the blockchain path, right? So essentially, efforts like Libra, Calibra, and so on are efforts to disintermediate the current banking system in the interest of innovating for the consumer by creating an altogether separate walled garden built on the back of blockchain. So your wallets and stable coins all built on the back of blockchain. So in India, what you're noticing is essentially powered by public platforms at the base, like UPI, like Aadhaar, and soon like Account Aggregator. Different players can come together, regulated as well as unregulated fintechs and startups, to actually innovate for the consumer and solve those same problems in much more magical ways. And our mission at iSpirit for the past 10 years has essentially been working towards Rajni. So you'll see this time and again in every presentation of ours, right? Rajni, you could imagine she's a vegetable vendor, right? Often takes a loan in the morning and retires it in the evening from an informal money lender. And so her interest rates are 1 to 2% per day. So pre-COVID, if you went to any mandi, you would often notice vegetable vendors, and whenever the trucks come in the morning, you'll notice money lenders to the side. So the vegetable vendors will go collect the goods, borrow money at these interest rates, and return it back at the end of the day. And if they don't, they face severe consequences, right? And that's exorbitant. I mean, 1 to 2% per day when you annualize is absolutely exorbitant. And so the question was, how do we formally include a person like Rajni into this system? And she has very simple needs. Her needs are she needs a loan for which she needs a mechanism to share her data to prove trust. She then needs a mechanism to see loan offers from multiple lenders and then accept the best offer legally and then receive the loan and then sell her goods and subsequently repay it. So what you see out here in the innermost circle are her core needs, right? And what you see in the outermost circle are the public infrastructure platforms that have been built to serve her. Now, we're not there yet. It may still take us another 2 to 3 years to finally reach Rajni, because this will only happen along with market players innovating on top. Fairly early on, market players will innovate for the first 100, 150 million in India and then go down, right? But we're getting there. And so if you look at it, you first started off with Aadhaar that allowed her to open a bank account. Then the next step was, now that she has a bank account, she needed a way to digitally transact, right? Make payments, receive payments. And so that's the reason why UPI was created. And after that, she needed a way to share her information, that transactional data trail, with lenders on the system. And that can only happen with consent because she has agency over her data. And that's the reason why the account aggregator system was born, where through any account aggregator, Rajni can link her bank account and in a safe, secure manner share that digital data trail with lenders, who then in real time can return back with loan offers to Rajni, and she picks the best one, digitally signs it because of e-sign, that's legally valid under the IT Act. And since Rajni didn't have a way to store her information physically, DigiLocker got created so that she could store it on the cloud. And then with innovations on top of UPI coming in, like e-mandates that allow for recurring payments, Rajni could now have programmatic collections enabled on top of her daily cash flow. So basically, what you guys will be building over the course of this month is actually the middle layer to service the needs of Rajni in the innermost layers. Now, you may choose a range of other use cases besides for credit. This may be wealth management and personal finance management and robo-advisory, or even deeper technology problems related to data governance and creating trusted clients for privacy-preserving computation and so on, right? But all of that is actually the private innovation that takes place on the back of public platforms like AA to serve individuals like Rajni and the other consumers out there. And this is for a lot of you, this would seem extremely uncertain, extremely unnerving, because it's quite rare. In India, what we're used to is the picture on the left, right? Haphazard development, no planning, right? So if, for example, Bombay, for the folks in Bombay, let's say in the Worli area, right? What you'd often notice is that around a bunch of a very haphazardly planned area, you'll see really tall skyscrapers. And now the folks building those skyscrapers actually have to build a bunch of stuff within it because they know they can't rely on the public infrastructure to take care of needs. So they'll often have backup power generators, their own sewage treatment plants, backup water facilities, and so on, right? Which in other developed economies, that's not the case. That gets managed by the government and other government agencies. And so therefore we are moving with public platforms. While we can't, of course, at least at iSpirit, solve the physical infrastructure problem, our goal is, can we at least solve this for digital infrastructure, where we lay the rails so that developers like yourself can go ahead and build these skyscrapers with the infrastructure that's there. So you can really focus on solving the problem for the consumer without having to build out a lot of this stuff within your startup, within your company from scratch itself. You can just leverage the infrastructure that's out there. And so along the way, what we realized as these various platforms rolled out, as connectivity permeated with the likes of Geo coming in, right? Indians are going from data poor to data rich at an extremely exponential pace, right? They are making digital transactions on a range of platforms. And so the question was, with that happening, the paradigm within which it was happening also is very different. In the West, when the users became data rich, like let's take a developed economy like the United States, where they have high amounts of discretionary income, data was fundamentally used to shape the spending patterns of individuals. So if you were a developer in that economy, what would happen is you'll typically create an application, use that to capture data about the user, and then personalize the ads that you show to the user so that any good or service that individual bought, you would earn a commission on it. And that's a hugely powerful business model reflected in the fact that some of the largest companies, both by market cap and revenue, are advertisement driven. But these same set of companies draw relatively piddly amounts of revenue from countries like India, where they have some of their largest user bases, or other emerging economies. And the reason being, in a country like India, at scale, most of us don't have money to spend. We have low levels of discretionary income, right? And so fundamentally, the advertisement model or data consumption purely for advertisement is a hugely flawed model. So we thought, could we invert this entire paradigm, where data, instead of being used to sell things to the user, right, through ads, is actually used to empower the user to access better financial services, be it credit, to bridge trust and eliminate the asymmetry gaps, or be it insurance, right, or other types of securities and investment products. And beyond that, beyond the financial services sector as well, especially in the case of healthcare, in health, what's happening as we speak is there's a massive democratization of biomarkers that's underway. You can see this playing out in the times of COVID, where the traditional form of diagnosis, which was on the back of symptoms, is no longer working, right? Most people are asymptomatic, 60 to 80%. And so essentially what you're having is decisions on the back of biomarkers, which are, say, in the case of COVID, the PCR-RT tests or the antibody tests, right? And as more and more of these tests come about and their costs start drastically reducing, and we have a commoditization of them, what you can now enable is, with the consent framework, share this biomarker information so that algorithms can actually drive a lot of these decisioning, and that can help bridge and augment doctor capacity within the country, right? So what you're essentially seeing is a paradigm shift from data, instead of being used in a fairly vicious manner to sell things to the individual, completely being inverted. And I'll soon talk about the underlying mechanics through which that is happening. So this is all familiar to us, right? I mean, as a lot of us have become data rich, the data sharing experience is horribly broken. It's broken not only in India, but it's broken worldwide, right? I mean, if you're applying for a loan, or if any of you have even attempted to manage your finances better, right? One of the predominant ways with which information is captured is through screen scraping, right? I mean, in this day and age of technology, literally, you're asking consumers to give out the username and password and screen scrape. Like, completely at a loss of words. But not only is it extremely primitive and insecure and harmful for users, because it also opens it up to other types of social engineering and phishing attacks, it's also very flaky and unreliable, right? When you're screen scraping a particular website, if there are changes in terms of the UI elements and so on, it's very unreliable. And so the experience you'll offer to your consumer on the back of infrastructure that relies on screen scraping is also going to be unreliable. The data as well is not trustworthy. It's not coming in digitally signed, right? But that's one predominant way of financial data sharing across the world. The second is, of course, what happens when we use any of these mobile apps and they attempt to ask us for permission to access our messaging and other logs, right? While a lot of that is already being clamped down by the likes of app store owners like Google, this is still a predominant way of data sharing in a mobile first environment. Or you just get sent to the bank branch, right? So if you're, let's say, applying for a visa and the consulate needs your 6-month statement, you have to show up at the bank branch, get your 6 months printout signed by the receptionist, and then take that in your folder to the visa processing center, right? Or whether you're going to a lender, then take that folder to a lender. Why couldn't we, in an electronic manner, at a click of a button, share that digitally signed information straight from my bank with any entity that wanted to consume it? That would have been safe, that would have been secure, that would have been near real time, that would have been far more privacy preserving for me, besides for all the other benefits of saving time, saving my money, and so on. And so that's where the entire consent framework kicks in. So, in order to enable sharing of information, like financial information, you need to codify consent because, like I mentioned earlier, we've now put the individual in the center of their data flows. And if they're in the center, that means they're empowered with consent to fetch their information and share it with any service provider. But this is a very abstract experience, right? What does it mean to consent? What aspects of data do you want to share? With whom? For what time period? For what purpose do you want to share this information? Do you want to share this information at a particular frequency? Like, let's say it is you're sharing it with a doctor who wants to monitor your health telemetry information, and so on. So therefore, the first step to do that was codifying / standardizing the consent that the user gives. And this may seem familiar to folks that have built applications in the UPI ecosystem, because as I mentioned earlier, what those third-party apps did, like Beam, was essentially they gave the user a way to authorize a permissions artifact to their bank account. And now what you're seeing out here on your screen is essentially a consent artifact, because in the data paradigm, your permission is nothing but your consent. And all we've done is, instead of you going to your custodian, which was your bank, the holder of your data, right? And either physically going to that custodian through the bank branch or digitally going to that custodian through net banking and so on, right? And then running around to multiple custodians, because you may have a bank account, you may have a pension fund account, you may have a mutual fund account, and so on, even within the financial services sector, right? We've essentially said, hey, let data remain with the custodian, but let's unbundle the consent from the custodian into third-party innovators like the account aggregator. So in this model, the data remains federated at source with the company that's generated it, but the user can now go to third-party innovators like the AAs you've seen out here to generate this consent artifact. So this consent artifact is a national standard, was published by the Ministry of IT. As you see, it lays out it goes into great specificity. It's based on a set of principles we call organs. So O in organs is it's an open standard. So this is the open standard that got adopted by all the financial sector regulators way back in 2016 at the FSDC level, as Nandan mentioned. So these were RBI, SEBI, PFRDA, IRDA. But this is the same standard that's now being adopted for health data, and has also been adopted for telecom data by TRAI as well. R in organs is it's revocable. So not only can I consent to share my information one time, but I can also consent to share that information on a recurring basis and then go back and revoke it. So let's say you're building a PFM app, right? A personal finance management app, and you need access to the individual's financial information on an hourly basis. Right? So the individual hands over that access on an hourly basis. But let's say the individual decides, I no longer want to use that application. So the individual can now go back and revoke that access. G in organs is the consent is very granular. So I don't only need to share my entire transaction statement with the lender. Let's say all the lender wanted to know was, do I have a minimum asset value greater than 10,000 rupees? Or have I maintained an average balance greater than 15,000 rupees over an X period of time, right? In that case, you can actually authorize access to this query on top of your bank statement, and only the output of this query would be shared with the lender. In fact, one of the special interest tasks in this hackathon is around designing the construct of a query language that would enable various providers to easily comply and share their information. So that way, individuals can have a much more privacy preserving method to share their data rather than just sharing it in the raw format and the entire set of transactions. The A in organs is it's auditable. So structured audit logs are generated every time consent is created, data is shared. The N in organs is notice. So just like when money leaves your bank account, you get notified. When data is shared about you, you get notified as well through SMS and email. And S is it's secure. So the data flow is end-to-end encrypted. Over the course of the hackathon, as you get into the specifics of the consent artifact, especially for folks looking at the data governance special interest stack, attributes of this become very key. Because when you're looking at it from a data governance point of view, which is essentially to say, when an entity receives my data, like the lender, along with that packet of data, they're receiving this packet of consent. And so they need to ensure that their internal system processes data in accordance with terms of that consent, right? So if I've shared that information for the purpose of a loan, that same information cannot be used for the purpose of marketing calls back to you. Or if that information has been shared for a particular data life, which is, let's say, 1 year, then after 1 year, that information has to be expired, and so on and so forth. So there are a range of parameters that you can now use from this consent artifact to build a really robust data governance layer for financial information users out there. But that's just one part, right? So the consent artifact essentially lays out the technology rails with which this can happen. The second part are consent managers, like the account aggregators. These are the ones where users can go and interact with to generate the consent artifact and facilitate sharing of their accounts. But these same principles, organs, have also been adopted by the Sri Krishna Committee, which was tasked to draft India's data protection bill. And the current bill is tabled in Parliament, but if you look at it, there are two aspects that are important. One, unconsented flows of data have been made illegal. So therefore, individuals have to consent and share that, right? There have been few exceptions for that. The exceptions relate to national security and anonymized data. But by and large, every other data flow has to be consented to. And the framework within which consent can be captured is essentially through consent managers like the account aggregator. So you can imagine from a regulatory perspective as well, India and other countries across the world, right? California as well. I mean, if you see, this is what Tim Cook and Satya at Microsoft are also talking about, and GDPR is based on a similar construct. But the main issue in the EU is with GDPR, they haven't built out the technical rails to make it happen, and that's the reason why they're seeing huge operational issues. The second part of the data protection bill that is key is the right to data portability. So under the draft bill, every individual has been authorized with a right to port their data from one service provider to any other in a machine-readable structured manner using consent managers. What this means is while we are, over the course of this hackathon, focused on enabling consented data sharing within the financial services infrastructure, very soon this will extend across sectors, across various categories of information, beyond just regulated data sets of finance and health and education and telecom, to other private data sets as well. So here's a quick overview of the account aggregator system. Right? On the left, you have what are called as financial information providers. These are the custodians of your financial information, like your bank. And some of the nation's largest banks have plugged in as financial information providers. As Mahesh mentioned earlier today, these include the likes of SBI, HDFC, Axis, ICICI, IDFC First, and other NBFCs like Bajaj Finserv and others, right? It could also be a mutual fund depository like CAMS and Carvi. It could also be your insurer or even the GST system if you're a small business. so that you can consent and share your GST information to avail of credit. Now, your data remains with these custodians, with these financial information providers. But every FIP, as they're more commonly known, essentially implements a set of standardized APIs that have been notified by the Reserve Bank of India. So in the document that Ariman shared, the hack pack, or if you go to sahamati.org.in, you will find links to the technical specification. And I will run through that also in the latter part of my session later today. But what's been prescribed is a manner through which any FIP in the country can actually plug in using a set of standardized open APIs. And so through those APIs, it allows them to receive consent and then, of course, internally do a bunch of checks of verification, validation, fetching the data, and then returning that data back to the account aggregator who forwards it to the respective FIU. Not only have the APIs been standardized, and you can think of the APIs as pipes, but the data that's flowing within that pipe has also been standardized as well. So if you go to api.rebit.org.in and click on FI types, financial information types, you'll actually find a link of more than 20 types of financial information, ranging from your deposit account to credit card statements to insurance to NPS balances to your share certificates and so on, all available in machine readable standards. Now, with both of these being standardized, which is the APIs being standardized as well as the data that's being passed through these pipes being standardized, it makes consumption of this data extremely easy. And that consumption will happen by what we call financial information users. This could be a bank that's performing a lending transaction. This could be a personal finance management app. It could be, like I said, the visa processing center. It could be a wealth manager. It could be a robo-advisor. Anyone. I mean, it could be beyond this as well, right? Any entity that the user authorizes consent to have their data shared with. Besides for that, the user can also allow for authorization where his data can be downloaded locally in his own device, right? So let's say I want to fetch my bank statement and store it locally in a secure enclave on my mobile phone at a daily basis or at a monthly basis. I can actually do that as well because I don't want to share it with the lender. That's not the only use case. I just want to see my own bank statement, right? And that is also facilitated. Or I can do that and then request for all of that information to be pushed to a personal locker that's hosted on the cloud. And that's also a possibility. So there are a range of FIUs, right? It could be, like I said, you could imagine it for lending, where you now have an altogether completely new borrower experience. If you're an MSME, that MSME can consent to share his bank account and now his GST data, right? And GST information will be a leading indicator. And then once the transaction is completed, it gets reflected in his bank account with the lender to receive a loan in a matter of minutes. Or it could be on the lender's end, where they use this information to monitor their asset quality for the purpose of monitoring, right? So I could actually authorize consent to my lender to access my GST information at a particular periodic basis, and the lender could use this for the purposes of monitoring and subsequent NPA prediction on their end. It could be, like I said, used for PFM. Today, there's not a single high quality personal finance management application in the market, right? I mean, most of us are financially illiterate, right? We have a huge problem in keeping our finances and our expenses and all of that together, right? And today, it's such a broken experience to attempt to even organize that, right? And it takes enormous effort. And now with the account aggregator system, that is possible at a few clicks of a button. And what that means is you can create diverse PFM experiences, because an app that would cater to users like myself will not cater to users, let's say, in more tier 2 and tier 3 markets. It's going to be an altogether different experience. An app that, if you draw an analogy from the money management world, right? An individual may decide to use an app like, let's say, mint.com, right? A certain set of individuals may decide to use an app like mint.com. But then moment you go beyond that, if you're a small kirana store, you're not going to use mint.com. You may end up using an app like Khata Books or OK Credit, right? That have really simplified that experience. And if you're slightly larger, you may use Tally, and even larger, you may use SAP. So for these diverse segments of consumers, we do expect an explosion in PFM apps, right? And would love to see the experiences that you guys build through this hackathon that's now possible because of the AA infrastructure. The same applies to wealth management. I mean, if you look at it today, you have the same problem with not only managing your day-to-day cash flows, but managing your overall wealth, your insurances, your investments. And there aren't any tools that do that for an average Indian. And the same goes for robo-advisory as well, right? I mean, there are, again, a set of companies that have solved it, but they've not solved it to the extent where they've completely abstracted all the complexity from the user, right? And so you still have a very high friction because you're showing me a bunch of stuff that honestly I don't understand, right? And so there is an enormous space. I mean, we have 17, 18 million mutual fund accounts in this country. We are a population of over 1 billion. With infrastructure like the India Stack, you can now have sachetized mutual funds, which is happening. For example, with UPI being enabled for IPO investments, it's brought in huge amounts of retail money into the financial markets, right? So can we build out new classes of robo-advisory that now on the back of my data is able to personalize the investment products that you offer and show to me? So you're going to have a range of FIUs that will come up, right? And some of these FIUs would also, I mean, this is only a logical separation, right? So one of the principles, and going back to a question that I saw earlier, was what were the incentives, right? These are completely market-driven incentives, which has resulted in some of the largest financial institutions to jump into the system, right? And one of the main market-driven incentives has been the principle of reciprocity. So if you are an FIU, a consumer of data, you also have to be an FIP. So if we take SBI Bank, for example, who wants to be an FIU for GST and information, or an FIU for bank account information, they also have to be an FIP to enable sharing of that information with the rest of the network. Now, this is actually not new. In the case of UPI, the same principle of reciprocity applies. If you are an issuer, if you want to be an acquirer, you also have to be an issuer. Or we go back to credit bureaus. If you want to access data from bureaus, you also have to report it. But the principle of reciprocity is actually one of the main driving forces behind market-driven adoption of this system. The second is, of course, that with the various apps that the developers on this call will build, that's going to result in an explosion of the financial services market. Right, as you know, we're severely underpenetrated on any count. Be it on credit, 8% of our small businesses have access to credit. Mutual funds, 17 to 18 mutual funds in a population of 1 billion. Insurance, it gets even worse, right? So therefore, and banks cannot innovate for these front-end experiences like what you guys can do on this call. And therefore, with the explosion of apps that takes place on the FIU segment, that will significantly expand the market. And that's a major driving incentive for a lot of the established financial institutions to participate in this network on a voluntary basis. And then we'll also have a diverse range of account aggregators, right? And this is where you guys can actually innovate upon as well. You'll have account aggregators focused on individuals. But again, when you focus on individuals, some individuals prefer self-service flows. But if you're building it for, say, the Bharat segment, they actually may want an account aggregator in an assisted manner, right? So how would the UX of that work? How would you simplify this, yet keep it a very informed experience? Similarly, what would an account aggregator for small businesses look like now that they have the likes of GST and other data sets coming in, if they want to share their GST, current account, and other information? Or what would an account aggregator for large enterprises look like, right? Many of whom have complex authorization chains and workflows to dictate who should approve that particular request, and it may not just be an individual, right? So you guys should also look at building out diverse user experiences, not just on the FIU end, but also on the account aggregator end. And it's through the account aggregators that individuals will consent and share their financial information. And powering this, right? So far, we've spoken about mainly end user applications. But to power FIUs, you need an entirely new software ecosystem. So we expect new players. One would be data governance players, or I categorize them as middleware players, right? So you'll have a new class of middleware players. One type of middleware players could be data governance, right? That ensures that FIUs process data in accordance with terms of the consent. The second could be prediction service providers, right? So now that FIUs are receiving this data, they're going to receive it. They're going to receive multiple types of data. There are going to be many fields in that. How do you actually extract the most relevant information? How do you predict, for example, whether this individual is going to default or not on the back of this data that's now available? How do you recommend what should be the right financial product the individual should buy, rather than just giving a list of 100 financial products that are available, right? How do you recommend, how do you predict what are the right financial products necessary and get the financial institutions to manufacture that so that you can offer that to the user? So you are going to have a new class of prediction service providers, right? And that's where, for a lot of the folks interested in the AI ML space, you guys can actually get your hands dirty on, because that's what's going to power the experience for FIUs out there, right? And then you're also going to have developer tooling oriented companies that make it easier for people to plug into the system. Imagine if you had a Stripe.com or a Twilio like experience to connect. If you are an AA, then to connect to any FIP, or if you are an FIU, then to connect to any AA, right? What would that look like? Or what would it look like? A lot of the FIUs, which are not technical savvy, can we build out a really smart app builder for them, a financial app builder, so that they can spin it up in the various workflows they have, right? If you let's take a bank, for example. A bank has numerous workflows and touch points with the consumer. At every which point in time, data is being transacted today physically. So how would you enable the bank branch on a system like AA, right? Where you go to the bank branch and the officer is like, hey, instead of giving me all of these documents, download this app and you can now consent and share your information and I can receive it, and so on. So how does one make it easy for these FIUs to build out apps? And so for the folks that are not too interested in building out end consumer facing applications, you can imagine an ecosystem of middlewares that power these end consumer applications to kick in as well. And for a specific set of them, we've actually created a track, and there are prizes allocated to this. The 5 tracks relate to one, query, right? So designing the query language layer that allows for more privacy preserving queries to be supported by an FIP, right? The second is data governance that I spoke about. The third is virtual data room. Again, this is a technology problem, which is, so far we've spoken of data being shared with the FIU. But what if the FIU could share its code, its models in a virtual data room, and the data is brought in there as well? And so if instead of taking data to the code, you bring code to the data, computation happens in that privacy preserving environment and you only take the outputs out. Now, this is possible in very limited scenarios. I mean, for the folks that have worked on this in the areas of homomorphic encryption and other types of multi-party computation, but how do you make this practical? How do you make this practical? If you have to imagine every Indian being supported by a virtual data room, what would that look like, right? And if you have any questions, you can reach out to the mentors whose email IDs I've added out here. Saurabh is a PhD in cryptography from IIT Bombay, ex-Bell Labs. In fact, has designed most of the consent framework that I've been talking about as well. right? So you can reach out to him. Ram is the ex-founder of JustPay, amazing guy. You can reach out to him for the query functionality. For the UX UI designers on the call, the special interest topic relates to designing assisted flows of consent that continue to be informed to the consumer. And so for that, you can reach out to Dharmesh if you have any questions. Dharmesh is the design lead at Setu and heads the D91 labs. And then finally on anonymization, right, which is how do I share? So far, we're talking about sharing of personal data, but if I want to share anonymized copies, and I only want to share anonymized copies so that it allows for building of machine learning models to take place at scale, what would that look like? Right. So these are a set of special interest topics. Aryaman, do you know the price structure around this? I'm not too familiar.
Yeah. So, guys, can you hear me? Super. I think.
Yeah, I can hear you.
Great. So the price structure is overall we have 7 prizes of 50,000 rupees each. So 7 teams will win a 50,000 rupee prize. The top 5 overall projects will win 5 prizes, and 2 prizes are set aside for teams that work on the special interest topics. So the 2 best teams who work on special interest topics will get a prize, for sure. That's the prize structure.
Awesome. Thanks, Aryaman. So now diving even more deeper. So for the APIs that have been RBI notified, the account aggregators have built out sandboxes. These links are also available on the hackbook that Aryaman sent out. They're available on the Sahamati website, or as you can see on the screen in front of me. So you can use whichever sandbox you feel is the most developer friendly and reach out to. On the right-hand side, you can see email IDs for any support that you require. And these sandboxes support the sandbox version of not only the AA implementation, but also a simulated data store of FIPs as well. So what I'd like to do is now run you through the account aggregator, FIU, FIP APIs. So that kind of gives you a high-level view of the system. And that would make it a lot easier when you guys actually get down to hacking. So let me pull up the APIs first, and then I'll run you through the sequence diagrams. One second. Perfect. So you can find the API specifications on this URL, api.rebit.org.in. Rebit is the IT subsidiary of the Reserve Bank of India. And out here, you'll have, as I mentioned earlier, you can actually view the various types of financial information that are supported in this ecosystem. As you can see, it's extremely comprehensive. In fact, like Nandan mentioned, India is so far ahead. I mean, open banking only relates to just payment and checking accounts. Out here, we've already got schemas in place for investments and insurance and other types of asset classes as well. You can view more details on it. You've got the entire schema definition file, but this is just a simplistic view of an XML version of what a deposit would look like, a bank account deposit, right? So out here, very broadly, the structure is it has a set of profile information. Which is what you see here. The profile information contains demographic details of the account holders. The account holder could be a single or joint account holder. At this point in time, we only support single account holders. For joint account holders, you need a multi-authorization workflow, and that's currently not supported. You then have summary information about this bank account. and its drawing limit and its OD limit and when it was opened and so on. And then you actually have the granular transaction. So these are the line level details of every single transaction in that user's bank account. And this is also where a lot of analysis can be applied. So what you see out here is this nifty field called narration, which is often where the various metadata of a transaction feeds in. So if any of you look at your bank statement, you'll see this description in that PDF. That's also called narration. And that's where a lot of analysis can come in to allow for categorization of transactions. You can know if this was used for entertainment or this was used for food and beverages, and all sorts of cool apps can be built on top of this. Similarly, for other types of financial information, you can view the schema and then build accordingly. Taking you back to the APIs, there are three categories of APIs: FIU, account aggregator, and the financial information provider. I'll first start with the account aggregator API and then run you through the others. So the account aggregator, as you know, is the entity that the user registers, then decides to discover and link their bank accounts, and after that authorizes consent to share that information with a lender or any other FIU. Actually, then let me start with the FIP API. That might be easier to explain first. So the FIP is your custodian of your information. Let's, to simplify, think of it as your bank, right? Now your information is residing with your bank, and you now want to link your bank account with your account aggregator, right? So you've registered with an account aggregator and you want to discover what are all the bank accounts that you have so that you can link them, and you can link multiple. So the FIP APIs out here, Discover, essentially allows passing of verified attributes, and these verified attributes could be like your mobile number, right? And in response to that mobile number, the FIP returns what are the accounts that are available against that, right? So out here you can see these are the discovered accounts that are available against your mobile number. This is then shown on the UI of the account aggregator, and the user says, hey, okay, these are my 3 accounts. I want to link these 3 discovered accounts. So then comes the next API where the account aggregator makes this is the endpoint against which an account aggregator is making a request to the FIP. So the account aggregator makes a request saying, hey, the user wants to link this account. And at that point in time, the FIP needs to authenticate the user before authorizing that linkage. And so the way the authentication can happen today is via an OTP. So the FIP sends an OTP to the registered user's mobile number, and the user inputs that mobile number on the account, inputs that OTP on the account aggregator, and then the OTP is passed, or the token is passed back to the FIP. And if it's successful, the linkage gets authorized. The reason the accounts are linked is so that whenever the user consents, he can do that extremely seamlessly on the account aggregator without having to go back to the FIP every single time to authorize that request. And many times, let's say you're consenting to share your information with a PFM app, right? And the app wants access to data from your bank account and your mutual fund account. You can't go to both of these accounts for that one transaction to go ahead and authorize. But on the AA, you can just do that in one click now, because you've already linked those respective custodian accounts. Of course, these accounts can be delinked, and you can, this is specific to an AA, get a list of linked accounts. Once you've established linkage, right? So now let's imagine you're a user, you've registered with an AA, you've discovered your bank accounts, bank sent you an OTP, you've successfully linked your bank accounts. So the next step is you actually want to use the service. So you land up at a lender, and the lender says, hey, in order to give you this loan, I need access to your information. Do you have an account aggregator ID? So I give the lender my account aggregator ID, Siddharth at the rate of AA, and the lender then sends me a consent request that shows up on my account aggregator, much like your UPI collect request. And then I look at it. It's shown to me in a particular UI. If it's okay, I approve it. Once I approve it, that consent artifact gets generated. And that consent artifact needs to be sent to the FIPs, who can then verify, validate, and return back with my data. So this is where the consent piece comes in. And as you can see by now, the consent and data flows have been decoupled, right? So using this, the AA can send the consent artifact to the respective FIPs, which has all these details. And then, of course, the FIPs will verify that artifact, validate it. And when it's ready, they will notify the account aggregator back again saying, hey, the information is ready. At that point in time, the account aggregator will use the data flow APIs to actually make a request to fetch that information. And once the information that's sent by the FIP, two things to keep in mind. One, of course, it complies with the schema, but more importantly, it is digitally signed, so downstream trust can be generated. And it is also encrypted. So the account aggregator is like a postman. He's just carrying the envelope from the FIP to the customer or FIP to the FIU. He cannot peek into the envelope because it's end-to-end encrypted. And the technical standard lays out the design around this end-to-end encryption that's happened, and the whole Diffie-Hellman key exchange and various specifics around that. So that's very broadly the set we would support discovery of the accounts with that FIP, receiving consent requests, and then sharing the financial information. If you're an account aggregator, these are the APIs. The account aggregator on one end is interfacing with FIPs, on the other end it's interfacing with FIUs, right? So for the end where it's interfacing with FIUs, these are the requests that it receives. So if you're an FIU building an FIU app, you will be sending these API requests to the account aggregator. The first, of course, is the request for consent that I spoke about earlier, right? What data do you want? For what purpose? For what time period? All of these have been outlined. There have also been a set of draft purpose codes, because purpose, as you can see, is very structured. It has a code, it has a message attached to it, it has a category attached to it, and so on. And so on api.rebel.org.in, you can actually see a list of purpose codes. But these are all extensible. So these are an initial sample set of purpose codes that have been laid out, but these are extensible. So do not hold back any of your hacks because of this. But this is a request that gets sent by the FIU to the account aggregator. Of course, once this request is accepted by the so the FIU sends the request to the account aggregator. At that point in time, a request is sent to the consumer by the account aggregator to approve it. So in that interim, a consent handle, which is what you see, was generated in response to your consent request as an FIU. This consent handle can be used by the FIU to query the status. So, for example, imagine you're building out an assisted flow of consent, right? And so for the user, it may take probably 10 or 15 minutes to approve, because it's operator assisted. The operator has to explain a certain set of things to the user and so on. And the FIU app is waiting out there, right? Your timer is going. And how do you know what's happening? How do you know what the status is? And since these are all async flows, you can use the consent handle as a mechanism to check the status. And then, of course, if the consent is successfully generated, then you'll get a notification, a call back from the AA, and you can use that ID subsequently to query the specific artifact. Once that consent request is approved by the user, right, as you saw previously, then the artifact is posted to the FIP by the account aggregator, and FIP notifies the AA when it's ready. And similarly, when the data is ready, there's a notification given by the AA to the FIU as well. So a key part of this architecture is the FIP does not know who the FIU is, right? And that's important from a privacy perspective as well, because imagine you're sharing your information with another lender. You wouldn't want your custodian bank to send you a set of 10 calls to persuade you not to leave them or so on, right? So at that point in time, when you get a notification, this is the API that an FIU will call the AA to request for financial information, right? And out here, you'll see all the key material details to ensure that the data that the FIP is generating is encrypted with the set of keys that are only known to the FIU. And so from as an FIU, the APIs that an FIU app supports is very simple. Essentially, you're supporting a set of callback APIs, right? That the account aggregator will send you when notification is completed and when data is ready. And on the back of this, you will then trigger the request to the account aggregator, these requests to the account aggregator. So that's a view into the APIs. And here's just a easier flow of what I just outlined. So I'll quickly run through that, and then we'll open it up for questions. So the first flow is discovery and linking, where the users come to a consumer AA app of their choice, right? And they've requested for a list of FIPs against their mobile number. The AA sent this. This is communication between the AA's front end and its back end, right? So the AA sent the list of FIPs, mobile and other demographic details were passed on. At that point in time, the AA passed on those demographic details to the respective FIP, who then did internal checks and returned back a set of masked accounts to the consumer. The user then selected which one of those N master accounts they want to link, and they may link all of them, and passes on that choice to the AA, who then passes it on to the FIP. The FIP then triggers an OTP to authenticate that individual, and that same token is passed back. And if the token checks out, the linkage is established successfully. The second flow is when the FIU is requesting for consumer consent, right? So if you're building your wealth manager app, you need to create a consent request in the API format I showed you, and then you will receive a notification whenever that consent request is created as a consumer saying, ping, this lender is asking for your data for this time period for this purpose. Do you approve it or not, right? And so, in fact, you'll first get a ping saying, hey, there's a consent request pending. You log in to your AA app and then view it. And then at that point in time, select the list of accounts you want to share your consent for. And once you've selected that, if all the validation checks work out, what you have is the FIU being notified that the users approved the consent, or if the users denied it, then they're notified that it's denied. And if it's been approved, the consent artifact gets generated and shared back. And that one copy is sent to the FIU, the other copy is sent to the FIP. Now that the consent was successfully approved by the user, the next step is the request for financial information, right? So the FIU initiates the financial information request, and at this point in time, they pass on a set of attributes related to the Diffie-Hellman key exchange that's to take place as well, so that the data flow is end-to-end encrypted. These attributes are then forwarded from the AA to the FIP, and the FIP then processes this request internally. In the interim, because this is an async API, it responds back with a session ID and then continues to process that data. It then makes a notification that the data is ready. And once the notification is received, the AA goes on to fetch that information. The FIP in response sends that encrypted information back, which gets shared with the FIU. And like I mentioned in the start, one flow is where the information shared with the FIU. The other flow is where the information is downloaded locally by the user on an account aggregator app of their own. And so you can imagine building out a really high quality AA experience where in my trusted client, you can decrypt that financial information and then visualize it and show it to me in various different formats locally itself. And in that case, it's a user logging onto their AA app using their own local keys that are stored on your smartphone key store, right? And against those keys, making a request for at whatever periodicity their account balance or their account transactions to be shared. So that's it, and that's how you can see in a fairly short span of time the entire end-to-end experience where every Indian can now consent and share their financial information and soon other types of information in a privacy preserving informed manner. And this forms one of the bedrocks for financial inclusion in this country, much like Aadhaar served as the bedrock for bank account opening, which was the first step, and then UPI served as the bedrock for payments, right? And what we are all in is an extremely magical point in time where this infrastructure has come together. It's taken years, as Mahesh outlined. It's been underway for, in fact, almost 4 to 5 years now, right? Because a lot of deep work had to go into designing these standards, driving adoption within these market participants, and creating this ecosystem. And now it's all come together. And so it's now really in your hands, the hackers, to build out really high quality experiences or innovate on the middleware end to power those experiences and really bring this to life. So that's it from my end. If you have any questions, you can feel free to reach out to me. I'm at Sid at the rate of iSPIRT.in. It's pronounced iSpirit, but spelled iSPIRT. So don't add an extra I after the RIT. And that's it.
Awesome. Thank you so much, Sid. So, guys, can we please have some applause for Sid? There's an applause emoji. So just spam that if you like the talk. Awesome. Thank you. I think we're breaking air meat with all that applause. But thank you, guys. And thank you, Sid. So let's get to some questions. First, a little bit of housekeeping. There's two ways you can ask questions. One is via text. So you can type in your questions on the questions tab on the right. The second way is that you can raise your hand. So when you raise your hand, you actually request to come on stage, and I can then bring you on stage to ask your question. So you can, with your camera on, and you can actually just ask the question, and everybody else can hear you and see you. So if you'd like to do that, you can also do that. I'll just quickly answer the first question, which is the most upvoted question right now, which is from Deep Anshu, which says the Sahamati FAQs mention that unregulated startups are not allowed to be FIUs. But here it is said that unregulated fintechs are allowed to participate. Could you please clarify? Yeah, great question. So the legal aspect, see, for the hackathon, we want everybody to build, right? For the hackathon, there's no restriction over what you can build and who can build. So as long as you're building on top of AA APIs or as part of the AA ecosystem, go ahead and build use cases, imagining that you are different kinds of companies, regulated or unregulated. In production, regulated entities can participate only. That's the current state of affairs. You'll be able to learn more about this in detail when we have our masterclass on the legal side of account aggregators. So we will have lawyers who specialize in this coming in to talk to everybody about these regulations and rules. So that's probably the best time, and those guys are the subject matter experts. So if you can hold on to your legal questions, all of those will be answered. We have 3 legal sessions about account aggregators. One session is kind of like an introduction to the regulation. The second session talks about who can become an FIU, who can become an FIP, and who can become an account aggregator, and what that process is like. And the third session is just an open Q&A with a law firm that specializes in this. So for legal questions, please hold on until then. I hope I've answered it. I'm going to move this to answer. So we have some other questions. Sid, please feel free to take any of these questions that you see. Can you see the questions?
Yes, upwards. Yeah, I can see it.
So you see the top question there by Mangeshkar R.
Okay, what if an FIU is partnered with a particular Yeah. Okay. So the question by Mangesh is if an FIU has partnered with one account aggregator, but the customer is giving consent in another account aggregator, how does it happen? So there is no concept from a transactional perspective of an FIU partnering with one particular AA, right? So what happens is, yes, an FIU may partner. Let's say a user comes in, a new user on the FIU's platform, and the user does not have an account aggregator ID. Then the FIU may partner with whichever AA of their choice to create a really native, really cool onboarding experience for the consumer, right? But let's say I have an account aggregator ID, right? So the FIU, you can imagine a box out there that says input your account aggregator ID. And of course, this can be improved with deep linking and other automated forms of discovery, but I'm just keeping it simple for now. You've got a box on the FIU that says input your account aggregator ID. Now, because the APIs have been standardized, right? So no matter which account aggregator goes live on the system and is part of the Sahamati registry, right? All of them follow the exact same APIs. The only difference is their endpoints. And that is also discoverable in the registry. Think of it like a DNS server of sorts, right? And so what that means is an FIU can, for whichever account aggregator ID is provided by the consumer, for that transaction, the FIU can send a consent request to that particular AA and has to send a request to that particular AA, and the rest of the flow continues. So think of it like in the email paradigm, there is nothing like an email client only works with a particular set of other email clients, right? Like at the rate of Gmail, they do not prohibit you from sending it to Proton Mail and other apps out there and Outlook and so on, right? So similar construct out here applies as well. I hope I have answered that question. Yeah. Then what
Hey,
happens if the user has different mobile?
sorry, I was just going to say I accidentally moved a non-answered question to answered. So that question, I'll just read it out again, and maybe you can answer that because that was the most upvoted question at the time.
Okay.
By Devin Gandre, tech lead of One Stack. He says mobile number in India gets recycled after fixed duration of inactivity and allotted to new customers. Isn't it security threat if there are bank accounts linked of previous customer of mobile number and then new customer will get hold of this? How is this handled?
Yeah, so what often happens, again, the security profile is determined by the financial information providers, right? So the financial information providers, some of them will also request for other demographic details, like a validated PAN number to be sent, or your first name, last name, and gender to be sent. And these are meta attributes that get subsequently that get captured by the account aggregator and sent to the respective FIP as part of the discovery flow. So through that, and through also on the account aggregator side, mechanisms like outbound SMS and mobile binding and so on, one is able to prevent attacks like that. In fact, on a parallel note, it would be an interesting idea to work upon the possibility of a mobile revocation list. So if you can imagine, TRAI is a telecom regulatory authority of India, and imagine just like you have certification revocation lists, imagine you had a mobile number revocation list that gets published, and then all custodians across the country that use mobile number and OTP for transactional services can actually fetch from that list. And if a mobile number is part of that list, block it on their platform and ask the user to like go to the branch and reactivate it and so on. And that drives better protection. So that's a slightly tangential idea, but if that's something that I think would be really cool if that's an area that you're interested in and want to hack upon. How does the next question is how does the reciprocity of information work for a fintech which wants to act as a FIU? So when we say fintech, right? I mean that's a very broad term. Bajaj Finserv is a fintech and they're a lender, or it could also be a PFM app, or it could be a company that's powering underwriting to a lender, right? So the way I would categorize it is into two parts. One, a lot of fintechs are actually today agents of a regulated entity, right? So they are technology companies. Imagine a company providing API gateway services, a company providing prediction services, a company providing like the app builder I spoke about, or the data governance product. These are all companies that are agents of the regulated entity. And so for them, the reciprocity principle does not apply, right? So for the folks building out these pure tech implementations that then need a partner to then go live, the principle of reciprocity doesn't apply. Because think of it, you're SBI Bank, and SBI Bank as an FIU has to also be an FIP. But SBI Bank uses Infosys and Finacle for their core banking system, right? And that's where the transactions are logged. So Finacle is a fintech company by any yardstick, right? But Finacle does not have to comply with the principle of reciprocity out here. SBI has to comply with the principle of reciprocity, and so they have to share the customer information linked to that identity, which is essentially a bank account information, right? So that's one, which is a class of technology companies in the finance space that are agents of regulated entities. And a lot of you on this call or interested in building hacks that are part of this call will actually fall into that category. And so the principle would not apply. For folks building the set of apps that directly interface with the consumer, like imagine you're building a personal finance management app, then you have to become a registered investment advisor, and there's a simple workflow to do that, to get registered under SEBI. Or if you're a lender, right, you're actually an NBFC, and so on, under any of these four financial sector regulators, then you get classified as an FIU, and on your own, you'll be able to access that information. And it is for you where the principle of reciprocity applies. And another thing I'd like to point out in this similar context, this goes back to the first question that was asked, is that the technology companies don't have to be FIUs, right? The pure technology companies that are powering FIUs don't have to be FIUs themselves. They can partner with an FIU, and through that partnership and through that contract, process data on behalf of the FIU. I hope I've answered that. The next question, how does a customer register at an account aggregator? Are those APIs available? The account aggregator registration APIs are non-standardized. We have left that open to the account aggregators to implement, right? So what I covered today was the base, most minimal standard that the various ecosystem partners had to implement to allow for interoperability across all these multiple stakeholders. But we've not standardized the APIs above that, right? And so each account aggregator, as you look at their sandbox and see their apps, they will have their own registration workflow, and that's completely up to them, depending on the customer segment they serve. The next question is, does an account aggregator consent request have an expiry time to accept or reject? Expiry has a parameter, so there's a parameter called consent expiry, and that can vary. And we've allowed it to be configurable so that depending on the type of customer the AA is serving, right? If it's a self-service flow, then you can have a shorter expiry time, like sub 5 minutes. But if it's an assisted flow, you may have a longer expiry time, like say 3 hours, right? So depending on what you're serving, we've allowed it to be configurable. But yes, an expiry has to be specified, where once the expiry is over, a new consent request will have to be raised if it's not approved. One of the questions is, if you want to become a consent manager in the financial sector space, you need to get an account aggregator license by RBI. And would this engagement help some of the projects to get an AA license in the future? The answer is no. This, of course, will immerse you in the infrastructure, so you'll have a much deeper understanding and possibly decide to become an AA in the future. But that application process is driven completely by RBI, the Reserve Bank of India, India's central bank, right? And that has no bearings on your participation in this hackathon at all. Can you share the link to the presentation? Yes, we will share these presentation links after this. In fact, Vamsi of One Money has answered. Thanks, Vamsi. He's also answered a bunch of these questions. I see one question related to the purpose codes. The purpose codes that Rebit mentions are very limited. Is there a plan to increase the codes, and can use cases be customized? Like I mentioned earlier, the purpose codes are not meant. The purpose codes that I showed you are only as a reference. Do not let them constrain any of the innovation that you go about doing over the course of this month. The spec even allows for extension of the purpose codes programmatically as well, right? And in fact, from some of these hacks, we would get even newer ideas to further extend that list. So do not use that as a restriction at any point in time. Yes. Anything else? Any other major question, Ariman, that you think I should answer?
Yeah, so we'll just take a couple more questions because we have another presentation which was supposed to be at 5, so we're running a little bit late. But the way that this works is that please upvote the questions that you like. So as an audience, if you upvote questions, we'll be able to answer the most upvoted questions. So go to the questions tab and you'll see a thumbs up icon. Just hit that to upvote the question. So the top one right now, Sid, is from Vikram Dulani, founder and CEO of Soul Identity. He asks, will AAs provide API or SDK to generate Diffie-Hellman keys, or will it be handled in the FIU platform? Also, will there be a central repository for registering keys?
Yeah, so there is all your long-term certificates do form a part of the Sahamati registry, right? And that's where they get logged. And then, of course, you will update them and revoke them accordingly. And those certificates become part of the registry, part of the production registry once you're certified. And then there's a UAT registry, right? So the production registry has certificates of all those that pass other procedural checks as well, like the account aggregator that has a license, or if you're an FIU and FIP that is regulated / registered with one of the sectoral regulators and so on. But the UAT registry is just for sandboxing and testing. Regarding the end-to-end encryption, there is an open source library that has been created by Shashi Kumar Ganeshan. He was, in fact, the security architect behind Aadhaar. It's on GitHub, and we can send you that specification. And that is the specific. It's actually on the Sahamati website. Let me see if I can pull it up. But it is that library that FIUs, AAs, and FIPs use to ensure that they can implement it. The implementation is compatible, because oftentimes you may use the algorithm and the implementation in different languages results in slightly different outputs. Although I would say from a hackathon perspective, if you may not, unless you're focused on the security piece of it, then do dive in. But otherwise, you may not particularly need to focus on that. So let me just see if I can. We'll send this across. What we'll do is, Ariman, if we can publish a new FAQ with a link to the end-to-end encryption library, that will be useful.
Yeah, we'll do that. I also wanted to say that, guys, a lot of your questions, I know that everybody has a lot of questions. That's super. You should please, ask them during the talks. Also ask them on Slack. I just want to give you guys an overview of the schedule of the hackathon, because there are speakers who will come in to talk about specific areas which will really help you guys. So the top question right now is by Warren Fernandez, who's asking, do any of the AA sandboxes have a demo app ready to simulate the consent flow during development? So what I would tell Warren is, yes, tomorrow the entire day we have presentations by the account aggregators. So they will go into detail about their sandboxes, what functionality they have, how to start using the sandbox. All of that will be answered tomorrow by the account aggregators themselves. So today, what I would encourage you guys to do after our presentations and stuff is to just brainstorm ideas, meet teammates, and read all of the resources in the Hack Bible. That will give you a very strong basis for understanding this framework and getting ready to build. Tomorrow, as I said, we have the in-depth sandbox exposition by the account aggregators. So there are also questions around security and stuff. So I'll just quickly run you guys through the hackathon schedule. So I'll share my screen here for a second. Yeah, okay, let's share the screen. So as you guys can see, tomorrow we have presentations by Perfios, Yodlee, OneMoney, FinView, and NADL about their sandboxes. So you'll go into depth about the sandboxes tomorrow. We also have a presentation by Lars from the Open Bank project about successful use cases from the EU and beyond. So it gives you some inspiration for what to build. We have a PFM masterclass. I know that many of you guys have said that you want to build PFM apps to help people manage money. That's super. We have a PFM masterclass by Amit Bhor, who's the co-founder of Walnut, which is India's #1 PFM app. It has more than 12 million users. That's next week on July 11th. We also have Sasi, who Sid was referencing right now, who is the security architect of Aadhaar and who constructed that open source security tool. He will give a presentation on security, cryptography, and interoperability also on July 11th. The same day, we also have a deep dive on insurance tech by Anand Datta. The next day, July 12th, account aggregator UI UX design masterclass by Dharmesh Ba. We also have on that same day a lending masterclass by the president of technology of Lending Cart. And we have an AI ML masterclass by founder of Jovian.ml. So, I'm sure you guys are going to have lots of questions. These guys will be able to answer several of them, and hopefully you can imbibe what you learn in these masterclasses into your projects. And then, as I was saying, we have legal masterclasses during the third week. We have another talk about India Stack and the role of the account aggregator by Sanjay Jain. And then in the last week, we have another legal masterclass, and we have a market sizing masterclass. How big can this market get, right? Like how many consent requests do you think this market can generate? So all of that is coming up. So I hope that many questions will get answered tomorrow, and in particular the account aggregator sandbox details will emerge tomorrow. So somebody has raised their hand and would like to come on stage. So maybe we can take questions until 5:30, and then at 5:30 we'll have to end this session, and we'll take a small break before coming back for the next and final session of the day. So I'm going to bring somebody onto stage, Ajay Jadhav, CTO and co-founder of Ironworks.
And I'd just like to point out, I have sent the encryption toolkit link on chat and the question box, but it's basically tools.sahamati.org.in, and you can find the toolkit out there.
Hey. Welcome, Ajay. Please ask your question.
Hey, thanks, Ariman. I hope you're able to hear me.
Yes.
Okay. My question is to Siddharth, and it's the same question that Vikram Dulani of Soul Identity raised. The question is, can AA framework be extended to include for storing and sharing of data using the W3C global standards of verifiable credentials?
Yeah. So, from the point of view of issuing, so there's a first step, which is issuing data against a verifiable credential, right? And that could even take the form of badges and so on. And when you think of it, especially in the skills ecosystem, this use case comes up, right? Where if I'm a blue collar worker, can I ensure that my data, which could be, let's say, all the trips that I have done or the other work that I've completed, be issued as credentials linked to my identity, and then subsequently have a way to share that credential when I move to another city, because this is a problem that blue-collar workers face a lot. They move to another city, they start from scratch, unlike you and I. So absolutely, and we haven't yet designed an extension of it on top of AA. But if that's something you guys want to work on, that would be absolutely fascinating. And I'll also pull up the skills spec in parallel and try to send that across to you, where we used something similar, but it wasn't on top of account aggregator.
That's great. Thank you for this clarification. Yeah. Thank you very much.